Happy Monday, traders. Thanks for joining me today on this Monday, the 9th of August, 2021. This is episode number 2047. 2047. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Very quickly, we're going to jump into the convergent trading pre-market summary sheet here. Some action overnight that provides some interest. You may have seen what some are calling the flash crash. And I hate saying that some are calling it that. But there has been quite a move in the metals, gold specifically. Much of the metals moved about 5% right off the open on a quick move down and recovery. As you can see in front of you here in real time, gold is trading 1745 currently, but it got down as far as 1677, quite a ways down. Same with silver. Silver got down to $22.29.5 with a high of 24. That's quite a swing for silver. So there's been quite a move there, with crude also coming off. Crude oil down 3% currently. Crude got as far down as 65.15 overnight, 65.15, a lot more than just a day's range. So those generally the commodities are getting hit. Copper getting hit. The use of copper is kind of a metal that very often represents growth in manufacturing, or collapse, or reduction or stagnation in manufacturing. And copper also took a bit of a beating in the overnight session. So some interesting stuff there. There's some talk. There was a letter that was released to Congress by the U.S. Secretary of the Treasury, Janet Yellen, essentially saying we need to raise this debt without the debt limit, without politicizing the issue. That much of the spending that this debt limit is encumbering came from the prior administration, and that this does not mean it's approving new spending or anything like that. So there's some politics going on with the debt limit. We're seeing quite some moves in the treasuries as well, with the 10-year yield pushing up above 1.3, I think. And so on. So there's what this looks like to me, and if I can editorialize a little bit, what this looks like to me is a closing or a shutdown trade. The NQ opened up and dropped down into 15,003 from about 15,100. The NQ has dropped and pulled back up, and actually went higher than its opening price in the overnight session. The NQ has had about 123-point swing in the pre-market. And again, the stocks in the NQ represent stocks that have done really well in a shutdown environment. You know, everybody's in front of their Netflix. Everybody's gaming, everybody's remote work, things like that. So we've seen the NQ kind of lag a little bit over the last week or so as more and more reopenings come into play. Of course, this is all distorted somewhat by earnings, which have already been priced in. So overall, it just seems like there's some repositioning going on. So I would say that this week, although not super special in terms of calendar events, since we have the FOMC behind us, we have the non-farm payrolls behind us, we've got several releases from the EU and so on. It's expected to be a relatively volatile week. So pay attention this week. I think it's worth tracking what's going on. So that's that. Today, again, the key elements I'm seeing across the media and so forth are the U.S. debt limit, the metals flash sell-off, and commodities down and getting hit. Today, the calendar holds a couple of events: the U.S. JOLTS job openings for June at 10 a.m. Eastern, Fed's Bostic at 10:10, Fed's Barkin at 11:30, and in the Japanese current account for June at 7:50 p.m. Note the rotations up here. They've been adjusted slightly. They have come off slightly. They've been reduced slightly as a result of some of the volatility falling off as we rallied to new all-time highs last week. So that's where we stand. Where's the S&P? The S&P has traded 142,000 contracts. It is balanced at this point. The overnight inventory in the S&P is 100% short. 100% short. It is, which means that all of the volume, 100% of the volume in the current overnight session has traded below the prior session settle. The range so far, 17 and a quarter points. Point of control, 44.21 even. And that's where we stand today. Looking at what was expected on Friday. Remember, Friday, the expectation was a pretty jagged trade, pretty difficult trade, expecting it to be somewhat of a rest day. The primary scenario was looking for us to break the 29.50 and push to 38.41, where we have these multiple measured move levels above. And then we also had multiple measured moves in this area down here in the 29 to 31 area. The secondary scenario is basically what we had, which was to test upwards and then hold sideways in what was a chop session. Friday session, here it is. Friday session really had very little action. It traded a little bit more than Thursdays. This is Thursday, 4-tick Renko. This is Friday. You can see there's a few more rotations in Fridays, but overall it's been stalling out. Friday had a unique situation in the S&P's RTH session in that it did not break the IB high or low on new all-time highs. I don't have a record of that going back 15 years. We've never had an IB not break. The IB stats, something like 98%. Historically, again, past performance is not necessarily indicative of future results, but 98% historical probability that the IB high or low would be breached, not touched, but breached at some point in the session. And to have that happen on all-time highs, there's no instance of that. And so Friday's action was quite slow, quite jarred, and very, very, very difficult to trade. Back and forth. Friday was a losing day for me. Two straight losses, two straight stop outs, and then I didn't see anything else before I had to travel. But overall, not an awesome day. Maybe a scalping day, but I didn't see clear opportunities there. So Friday, new all-time highs pushing to 44.33 and a quarter, but overall sat sideways. And then since then, we sold off. We sold off down to 44.16 and are now holding steady at 44.25 or so. That's where we're currently trading. So that's where we stand this morning. In the overnight session, so that was not so not so great a mimic of what was expected on Friday scenario two, because it was a lot tighter and it was a lot more difficult to trade. The overnight session, we opened and we immediately sold off. This went across the board. This went all the way across the board in the commodity space, in the future space, and and we're holding steady now above above VWAP, above the overnight point of control. So even though we have negative overall negative um, um, action, negative inventory or short inventory since the open versus Friday's close, we are actually holding above the VWAP and the overnight point of control, and we are inside of Friday's range. So this creates a kind of an odd situation here for this morning, with this clearly sloping up and back inside of the range. So I'm expecting a relatively choppy open this morning, despite the movement in the overnight session. You would expect movement like yesterday's or the last night's here in U.S. time. You would expect that to have a whole lot of volume in it and a whole lot of action in it. But really, it did not. It did not do so. It's grinding its way back up to Friday's equilibrium, and is holding steady with the delta at basically zero down here. So to me, under normal circumstances, I would expect this to be a drop, pullback to the mid here, and for it to hold steady into the open, and then we'd be looking for it to fall through and finish and complete the original impulse down. But what it has done is it has impulsed down like we saw in the NQ. Here's the move in the NQ. The NQ had a very clear, sharp V bottom. Okay, the NQ is trading above its open currently, and to me that puts us in a somewhat of a neutral position on the open, as opposed to having a direct or clear bias. So that's what we have in the overnight session. The week last week, just to make sure we review and keep tabs on the bigger picture, we had a week that put in just slightly a higher low and new all-time high, and finished in the high area for the week. So there's some the action is somewhat disjointed, right? We're getting mixed information here. The overall trend, weekly trend, is still up. We're still one-time framing up with a strong finish after testing the prior session high. We have a strong finish, and then we had the selling this morning that brought us back up and is holding steady near all-time highs. We're not letting go of these all-time highs. So even though the overnight inventory is 100% short, much of the action has occurred below Friday's settle price. We're still, the important piece is we're still not letting go of this high. And if we don't let go of the high, in terms of auction market theory, what does that say? It says that we have not found those sellers. And so if we have not found those sellers, then we are very likely to continue to explore higher prices until we do. So mixed messages this morning. Probably will sit on my hands for the first 15 minutes or so just to let the market set up, see if the metals turn positive or get back to unchanged for the day or so, and looking for crude to make somewhat of a recovery. If not, then those sectors, the energy sector, is likely to be a drag on the S&P. I think the energy sector is about 8% of the S&P 500. We'll see how that plays out. But overall, look at where we are on the composite. Look at where we are versus last week's box, which is the dark gray box there for last week. look at where we are, and it's clear that the market is just absolutely not letting go of these higher prices. So it's got more room to the upside, and it still has a strong chance of squeezing shorts and pushing to 44.50. So that's where we stand this morning. In terms of what the action holds in the order flow in the shorter time frame, there's been pretty active order flow in the overnight session, seeing some size at value high from Friday at 44.30. There's resting size there, which is just above the settling price. You can see it right up here. The size has been sitting here a bit. Settle and close are on top of each other right here. And then from below, there's not much down until 44.10 in terms of reasonable bid. But I'm not seeing large blocks anywhere along the book all the way up to 44.40, which also coincides with a big cluster of measured moves. So 44.40 has a pretty good resting block size order up there. Other than that, it's really 44.30, which is not a large block. You can see that only a small portion of that 500 is a single contiguous block. So that's where that stands. Let's take a look at what's expected for today. Here we go. So what are we looking for today? This morning, again, the important thing to observe, we are above mid, above VWAP, above the overnight point of control. Right here, this brown line is the overnight point of control. We have the prior high up at 33. There isn't much here. We had balance basically on Friday. We're inside of Friday's range. Pay attention to Friday's value high, value low. Remember, the value high has some size on it at 44.30. To me, this looks like an open auction that is likely to push into the prior session's close, prior session's point of control, and prior sessions settle into that 44.30 liquidity, hold steady, consolidate in here, and likely to push and squeeze through that 33 on its merry way to 44.40 and into this measured move cluster. This cluster is from 38 to 41. This is the next big cluster with some size at 40. So this becomes a key target above. The reason I'm looking long is because despite the move down, the strong move down on the open right in here, this price action is rejected. Appears to be rejected. The inventory is very, very short. I'm expecting it to squeeze higher this morning. We have not really moved away from these highs. There's nothing here that tells me that the market is done exploring higher prices. Secondary, open auction, squeezes up into the 44.30, is unable to push through, gives us an impulse back through the open, consolidates, and then starts to tackle the overnight low, 44.21. Now it gets out of range. Remember, 44.2175 is Friday's low in RTH. Once it does that, it is likely to start exploring these lower prices. 44.15 was the key target to the downside on Friday. That becomes the key test area for today, giving us about 15 points of range. That's scenario 2. So we're opening in range, in value, basically against Friday. We have rejected lower prices overnight and come back into prior balance. Those are the boulders or the big pieces that make up the foundation of what we've got going on today. Hopefully you heard me nice and clear. and you've got a plan for today. And let's go out there, manage our risk, and let the market come to us with whatever opportunity that provides us with an edge. Try to be very, very aware of your emotions. Try to be aware of how you're responding, and learn not to act on emotions, but to acknowledge them and then stick to the plan anyway. Right? Be that fighter pilot that does not freak out the first chance you see an enemy airplane. You need to fall back on your training and execute your plan and your training as you trade. It's kind of the same thing, not as life-threatening, of course, but just stick to your plan. Good luck, and I'll catch you tomorrow morning. Take care.